Let's bring in Brendan Ahern, the Chief Investment Officer of KraneShares. Brendan, it's great to speak with you today. I do want to start right there because we've seen this strong rally in Chinese stocks in the last couple of months with the reopening, and I want to get to that in more detail. But first, the fact that you did see Chinese stocks and a number of ADRs that are traded here come under pressure, given the headlines of this executive disappearance. Just how real is that risk for some of these biggest publicly traded companies in China, and does it potentially signal another round of regulatory crackdowns?
Yeah, I think it's a very unfortunate situation. China Renaissance, a healthcare TMT-oriented investment bank. You know, it appears, and it's hard to tell how this plays out, Morgan. I don't think we can jump to conclusions. There was a former employee who, based on his former employer, ran into some issues, regulatory issues in China. So it's feasible, but that the China Renaissance president, that he is being questioned based on this other employee's situation at his previous employer, and that hopefully he gets, does a Q&A with the regulators and then is back at work on Monday in China. Time will tell. I don't think we can jump to conclusions quite yet.
Okay, so let's talk a little bit about the KWEB and what we've seen in terms of Chinese stocks and Chinese exposed stocks on the heels of this reopening. And KWEB's down about 8-9% over the past month, but it's up big since October. I guess talk me through whether we've seen the best of the gains as we've seen the reopening play out, or whether there's further to go here.
Yeah, I mean, our thesis has been that after the Party Congress, you've seen China make very significant policy changes on zero COVID, real estate, as well as the U.S.-China political relationship. And that helped fuel this reopening trade where KWEB literally went up 100%. And obviously, we're seeing a correction. We're seeing a pullback. And this happened before the balloon. It happened before the very harsh rhetoric from Fed officials, where we've seen the dollar get very, very strong over the last 2.5 weeks. So I think some of the pullback correction we're getting is not even really related to Balloon Gate. It's not, it's simply just we're getting a correction, we're getting a pullback. And next week, Morgan, we're going to have earnings from some very significant companies, Alibaba, Baidu, and NetEase. So that could provide that next catalyst for KWEB.
Okay. Something else that we haven't been talking about very much here, at least stateside, is the fact, and this was just a headline this morning, China pumps $121 billion U.S. into economy in the biggest one-day cash injection to spur post-COVID growth. While we're seeing the Fed here go on tightening, this aggressive tightening cycle over the past nearly year now, we're seeing other major central banks do the same thing in other major economies. Not so in China. It's still a very stimulative environment there. How much of a tailwind does that still have yet to give?
Yeah, and that's why we're an exact thesis on why we think investors should buy this dip in KWEB, Morgan, is that you have central banks globally are tightening, and that's because of high levels of inflation. And that's against a backdrop of high equity valuations, say here in the U.S. and Europe and elsewhere. China, it's almost the exact opposite situation. You have quantitative easing, interest rates are falling, equity valuations are reasonable. And so we think that China on an absolute as well as on a relative basis looks really strong, combined with the China consumer coming back online across 2023.